Welcome. Jay, nice to have you here.
Thanks, Glenn.
I'm tempted to ask you if you're long Bitcoin, but I think we're not allowed to do that.
No, you can ask.
I can ask.
Yeah.
Okay. So, Jay, well, let's jump right in. We only have half an hour today, so let's jump right into the topics of the day, which is digital currencies as markets infrastructure, currency, securities, and commodities. So let's look at it from each of those perspectives and think about the regulatory kind of interest in it. You've said in the past that that digital ledger technologies, quote, as infrastructure, quote, have incredible promise in driving efficiencies in markets, which most people don't think about, but which is a core goal of your organization, correct? So talk a little bit about that.
So let me just say correct on many levels, and I also have to start with the usual disclaimer that my remarks are my own and not those of the commission or anybody else other than myself.
Good.
But speaking for myself and speaking as an observer of markets and someone who cares a lot about markets, this technology has incredible promise in the infrastructure. Look, I think it has incredible promise in infrastructure beyond our securities markets, shipping, countless other places where, a verified record is something that we spend a lot of money making sure we have, and the efficiencies added by distributed ledger technology, we can bring that. I mean, look, in government, I can remember as a young kid going down to the registrar's office with my grandfather because properties and liens and everything had to be registered. How many debt deals have you done where you had to refile all the UCCs, where you had to ensure that you had liens on property and
happily we always had lawyers to do that.
Yeah, thanks a lot. But
I was told they did it well. They did it well.
And you know what? Your bill would be much smaller if you brought.
That's a good point.
Your bill would be much smaller if you brought distributed ledger technology to that aspect of our financial system. So there are all sorts of aspects of our financial system where I see this type of technology driving efficiency.
Got it. And that's something which, as the person responsible for the efficient functioning of the U.S. markets, broadly defined, you are optimistic about and prepared to encourage.
Without a doubt. Look, my lens is how can we improve what we're doing in no way degrading investor protection? That's kind of how I look at a lot of what's going on, whether it's trading or issuance or other aspects of what we do at the SEC.
Like you described, a permanent, what we describe in this role as a permanent immutable record subject to audit. That serves your purpose as well, I would imagine.
Serves our purposes very well.
So let's move on from the infrastructure element of this world to currencies. You said when currencies act as a replacement, when digital assets act as a replacement for a sovereign currency, dollar, yen, or euro, that type of currency is not a security. Obviously, one of the very important roles of digital assets is to operate in the payments world. So talk a little bit about how you make that judgment and that distinction.
Yeah, and let's be clear. We live in a principles-based regulatory environment for what's a security, what's a commodity, and what may be something that's not a security or commodity and could be a currency.
So for the non-lawyers in the room here, I want to spend...
Do we have an audio problem?
Yeah.
Was this like Bob Newhart? You were only getting half the...
Does that work? Can you hear me better now? That better? It'll be less interesting now that you can hear me, I guarantee you. Talk a little bit about the difference between principles and rules-based systems and how you think about that in application to this question. The question was how you think about digital assets as current when they act as currencies versus when they operate as securities.
Okay, so just to back up, I think one of the questions that is inherent in what you're asking is, what's the definition of a security? What is a commodity? And what is something else? And we've long looked at sovereign currencies dollar, yen, euro, as neither a security, nor a commodity, a currency. Those definitions are principles-based definitions that have served us well, and we can talk about it at length. You cited testimony of mine, and I've made the statement in testimony, and I've made the statement generally that, and I'll reference it, an asset like Bitcoin, where decentralized, no one is creating it for their own, their own control of Bitcoin, but it's designed to be a payment system replacement for sovereign currencies. We've determined that doesn't have the attributes of a security. I think the CFTC has made I'll leave commodities to them, but as far as I'm concerned, that's designed to be akin to the dollar, the yen, the euro, and operates that and operates that way.
You have some fans over here.
Okay, I mean, and it operates that, and it operates that way. People who purchase it are expecting it to operate that way.
Gotcha.
And it's not centrally created or distributed. There's not a single. Glenn Hutchins doesn't own the right to produce more Bitcoin.
Gotcha. So you have emphasized that the anti-money laundering, know your customers set of rules attached there. That's not an SEC regime. That's more of a banking regulators kind of piece of it. But as you see that, that's something that's outside the regulatory ambit or orbit of the SEC. As
a general matter.
As a general matter, yeah.
Now, I've made it clear to the extent that broker-dealers or other people we regulate start accepting Bitcoin, I expect them to treat that as if they're accepting cash and apply the appropriate AML and anti-money laundering and KYC, know your customer checks.
As they apply to the broker-dealer community.
As they apply to the broker-dealer community, and as they would apply if I showed up with, a check.
Right. Now, interestingly enough, one of the things, as your background as many years as a corporate lawyer, you understand that different regulatory agencies can take different points of view on the same topic, and your job is to help your clients work their way through all those things. In a recent speech, one of the Federal Reserve members of the Federal Reserve Board of Governors said that cryptocurrency is not a traditional form of money because it's not a liability of any individual or institution. It's not a liability of the Federal Reserve Bank. It's not a deposit account, which is a liability of a bank, and it's not legal tender. So that view is that it actually doesn't act like a currency as a matter of regulatory interests of the Fed. Mm-hmm. How do you square that circle?
I read that quote, or I listen to that quote, and I say, it's different from dollar, yen, and euro because it's not sovereign backed.
And it's not a liability of a bank.
And it's not a liability of a bank.
Right.
And I think what the Fed official was saying is, while it is a payment mechanism and is designed to be a substitute for, it's not the same as a sovereign currency. And people who use it should understand that it's not the same as a sovereign currency. And we can go into, I think, they've made other comments as well, as many banking regulators, on the differences between a private payment system and a sovereign currency, and those differences are significant.
So I think,
but that's not my area. I just read the papers.
But the way I read this, they get to much the same conclusion, which it also is not a subject, as long as it's not acting as a bank liability or a sovereign currency, it's not a subject of their regulatory interest either.
I'll let them.
That's how I read that.
Okay, I'll let them speak for themselves on.
So now let's get on. So that's currency. Let's talk about when digital asset transactions constitute securities offerings.
Okay.
I think people in the room here have been quite interested in this topic. Obviously, you've said that ICOs, quote, can be effective ways for entrepreneurs and others to raise funding, including for innovative projects. Mm-hmm. So you're clearly, unquote, so you're clearly not per se see these problematic. And your organization, you and your colleague Bill Hinman, have outlined key indicia by which a coin offering or a sale of a token can be a securities offering and not. Can you take us through that a little bit?
Sure. So this will take a minute.
They have a minute. Yes.
Okay.
Don't worry.
Okay. So look, you have to know a little bit of the history of our securities laws. We've started with a very, coming out of the Depression in the 33 and 34 Act, we decided that we were going to regulate the offering of securities and the trading of securities. And the offering of securities, we were going to regulate, basically bifurcate it. A public offering, where you seek a broad investor base, or a private placement. Narrow, investors known to you. That's developed more to include sophisticated investors and the like. You know all of this. But in the public offering space, the drafters of the 33 Act were very smart people. They realized that having a definition of a security that said it's a piece of paper that you give to somebody in exchange for an interest in a corporation would be way too narrow a definition. You'd come up with something other than a corporation that would house your venture, right. And you'd come up with something other than a piece of paper that would identify your rights.
Like famously the whiskey warehouse receipts?
Correct. Yeah. The whiskey warehouse receipts, or interests in a Broadway production. Right. All of which have been determined to be securities over time. And so what is that definition of a security? Or one aspect of that definition of a security. People refer to it as an investment contract. But it's when I, as the investor, give you my money with an expectation of a return based on your efforts and the efforts of your affiliates.
So I'm either the entrepreneur or the manager, and you look to me to run an enterprise.
Correct.
Might not be classically a company. It could be some other kind of enterprise, but I'm the entrepreneur responsible. You give me the money, you expect me to generate a return for you.
And a return that I either get through your efforts and distributions and the types of things that you get, or I get because I traded in the secondary market. Right. Which brings me to the second aspect of our securities laws, which when we have open public trading, and it's done through a matching of buys and sells, who's the person or entity doing that matching of buys and sells has to register as an exchange, or also find an exemption from registration as an exchange. So you can have private exchanges, but they have to stay within our well-known exemptions for that type of activity. If you're going to have a public broad exchange of securities, you have to register as an exchange. And this system has worked very well.
And now what role, so you have the investment of money in a common enterprise, mm-hmm. and you have a manager or a entrepreneur that you look to generate the profitability for you, and those and the profits interest in those enterprises are being exchanged.
That's another indicia. Yes.
Is that the way?
Yeah.
But what's the role of decentralization? One of the things that I think was emphasized in the guidance that came out of the SEC was sort of a, quote, truly decentralized network with no central third party. I know that might go back to the first issue you raised, but since decentralization is the core of this technology, mm-hmm. what is the role of decentralization versus centralization in the network in talking about this matter?
Well, let's put it this way. But something becomes, when a store of value becomes truly decentralized, that means not one person or group of people controlling its supply or controlling its trading or dictating how it's done. When it becomes truly decentralized,
or with asymmetric access to information.
Correct.
Right.
Correct. Those type. We've essentially said that's distributed, and it's like trading on an exchange. You don't have to re-register those transactions as a new offering of securities. It's in the secondary market. It's distributed. It's decentralized. That's an analogous way to look at it.
So the people in this audience are obviously very practical. They're interested in how this applies to different tokens. Mm-hmm. And I think the analysis that has come out of the SEC around the general way in. Let me ask you a question first. Another question. You suggested that tokens and their networks can evolve from one use to another and become more or less decentralized over time and go from being securities offerings or not. Mm-hmm. So talk about that a little bit and about how this kind of guidance can change as the representations made by the parties and the use cases change.
All right, let me try. I've never tried this analogy before, but we're sitting here. I was passing Broadway. Like, let's say you're a producer of a play, a new play, and you get 15 people to invest in that play, and you say, your interest in this play is going to be a suite of tickets. Haven't done it yet. You're giving them tickets in exchange for their interest in the play. Those tickets are securities. They're taking those tickets back, waiting for, the profits. It's like taking 10% of the play.
And I can presumably sell those tickets to others when the play is successful to attend the play.
Yeah. The play gets done,
right.
It's up, you're long gone, everybody has their tickets distributed, and all you can exchange those tickets for is going to see the play.
That's decentralized.
That's decentralized.
Right. But then if someone bought all those tickets and then used that to take control of the play, mm-hmm. then you'd have a very different kind of
and that's
relationship
right.
to that.
And there's a dynamic around when we believe the government needs to step in and require registration and monitor the sale, and it does have very much to do with control and your ability to direct the enterprise and people's reliance on and dependence on that control and ability to direct the enterprise.
Now, the reason why I'm pausing on this, Jay, is that the entrepreneurs, as you well know, building and running companies need certainty so they can act. Mm-hmm. In a principles-based versus a rules-based world, there's less certainty because you have to apply the principles in individual use cases, mm-hmm. and things evolve over time,
right,
as we've just described. So one of the roles of the SEC has historically been to help people on a case-by-case basis with the assistance, as you've emphasized in the past, of lawyers and accountants and other subject matter experts who are their representatives. So talk through what the process is in the SEC for people who want to come to you and either get advisory opinions or get guidance or actually register offerings.
Look, we are happy to engage with people in this space in our Division of Corporation Finance, Division of Investment Management, and trading and markets on all of these issues. Bill Hinman, who you mentioned before, runs
right.
our Division of Corporation Finance. We have Val Sespanik. If people have questions, they or their lawyers can come to us. But I will say, if what you're doing is starting a venture and you're funding that venture by issuing tokens, you should start with the assumption that you're conducting a securities offering. I think that's a better way to look at it.
Start with that assumption.
Start with that assumption and say, am I conducting a private placement? Or if I'm going to do a public offering, I have to understand that comes with, significant obligations.
So you either have private placements to sophisticated investors or public offerings under a registered securities offering.
Right.
Is your view.
Right.
And then you can either find use cases where that's not the case, start with that assumption, but then work your way toward something that might be different if you have a very different kind of commercial proposition, and the company can evolve over time to something that's more decentralized, has less of one entrepreneur at the center of it, and it can evolve to something other than a security in its application.
Right. And let's
Is that correct?
Yes, and let's be realistic. Look at it from the investor's perspective.
Right.
Why? What is in it for the person purchasing the token or are they doing this in the same way that they would invest in a new company that was issuing stock? Or are they doing it as somebody who purely wants to use it?
Got it. And so the general guidance has come out of the SEC that Bitcoin in its quote unquote present state and Ether in its quote unquote present state are not operating as securities because they seem to be without central third parties and highly decentralized networks. The issue of the moment is, of course, what is XRP? Mm-hmm. Runs on the Ripple network. There are a lot of people in this audience who would like to know, but I think it's I know from longstanding practice, the SEC does not talk about matters that are in front of them at the moment. So I'm not going to ask you that because I know you won't give me an answer. And it's not just you, it's all your predecessors wouldn't have given me the answer either. I get it, don't worry.
I'm no better than they are.
But what's the process by which this is determined and the timing? when does the marketplace know the outcome to this really important question? Because as you know, Ripple right now is the second largest market cap token after Bitcoin.
I think I'll go back to what I said, is that we are open to people coming in to see us, engage with us, discuss their particular situation, and work through it with us. And some of the, I will tell you, some of these questions, require a lot of information in order to get to a definitive position.
Right.
Many are very obvious. I'm selling you my token. I'm going to go off and produce a venture, and hopefully you'll get a return for having purchased that token.
And I assume, like at other these situations, having a consistency of message as between the SEC and your investors is probably an important kind of starting point.
Yeah, let me just say this. We're very, very open to people coming in to see us. But I hope it doesn't come as a surprise that when you tell us about your approach, that what you tell us is the same thing you're telling people who you want to invest in your venture. If there's a big gap between what you're telling us and the way you're marketing your venture,
it's not a good place to start?
It's not a good place to start.
Okay, everybody taking notes out there, got that one down? But just like in a classic securities offering, get yourself a good securities lawyer, get a good accounting firm, come in with the right kind of approach and documentation, and you'll deal with the issues on a professional and as accelerated basis as is standard in securities other securities offerings.
Yes, please.
Yes, okay, got it. Everybody got that? So let's move on to, is that anything else you want to say on this important matter of it being securities? Any other message you want to make sure the community gets while you're here today?
No, look, if anything that I've said is less than clear or feels inconsistent, I want to know. That's why I'm here. So people can raise their hands at the end if they want.
Okay, are we going to take some questions from the audience at the end? I'm not sure if that's part of the plan or not. No, they're waving no.
Okay. So, you'll have to be omniscient and
yeah, exactly.
Read the body language.
I want to talk about an announcement the SEC made a couple weeks ago. 2 enforcement actions against 2 unregistered ICOs, another settlement with the founder of an unregistered exchange, followed quickly by a statement from the SEC calling the settlements a path to compliance with the federal securities laws. A path to compliance with the federal securities laws. Does this signal a new phase in the SEC's approach to ICOs and digital assets?
Well, I don't know that it's a new phase, but what was clear from these actions is that these offerings were conducted in a way that was not compliant with the registration requirements. They were securities offerings. I don't think there's any doubt that these were securities being sold. They were being sold in a way that was not consistent with the private placement exemptions. They were public offerings, and they were not registered with us. And when that happens, investors we have the right to bring actions, which we did, and investors have remedies. One of those remedies is the obligation of the offeror to buy back the securities at the price they were sold, and
otherwise known as rescission.
And these settlements embodied that concept.
Gotcha. So the investors had the right to be made whole if they chose, but you allowed the enterprise to proceed.
Yeah.
Right.
Look,
securities laws were complied with.
That's right. And look, people should understand that this was the remedy in this particular case, but remedies in future cases may be different.
Gotcha.
Anyway, get your act together.
Me?
No, you're good.
Me?
I think so.
All right, let's talk about
at least so far.
Let's talk about when tokens function more like a commodity, a store of value, that investors like industrial metals we talked about earlier want to trade and hold, and notably how this relates to ETFs. The CFTC, as you suggested earlier, has indicated that the Bitcoin qualifies as a commodity, that it can monitor under federal law. You've said the registration obligations also attached to product with its value tied to one or more cryptocurrencies, so it's clear that the registration obligations attached to ETFs. You've also talked about this in front of in your Senate testimony not long ago. But the crypto fund sponsors have, who would argue that they've done precisely what you ask of the ICO promoters, which is come to us, let us register an offering, have not been able to get the permission from the SEC to list an ETF on an exchange. So why not?
So from my perspective, and you're right, you're pretty good at this law thing for not a lawyer. You characterized it correctly. That's right. But if you have a commodity underlying an ETF, the sale of that ETF is a security, and therefore our regulation kicks in. One of the two things that people expect, investors, and just remember, our primary perspective is investors. What investors expect is that the trading in that commodity that's underlying the ETF is trading that makes sense, is free from the risk or significant risk of manipulation. Another thing they really care about, we really care about, is that the assets underlying that ETF, if you have a gold ETF, that whatever your assets are, whether they're futures or physical gold, that you have good custody of it, that it's not going to disappear, that the risk in the ETF is truly the risk in the value of the underlying asset. It's not a risk of theft or disappearance. Those two issues are important to me to get comfort on before we would allow an ETF with a digital currency underlying it to go forward.
So what is the difference between manipulation and volatility?
What is the difference between manipulation and volatility?
In other words, I think what you said was that one of the first...
That's a law school exam question?
Right. So one could argue that the internet stocks in the early 90s leading up to 1999 and then afterwards were incredibly volatile. But that if you'd bought them during that time period, it would be a great investment from the perspective of today.
Sure.
If you'd bought Amazon at the peak of its valuation in 1999, you would have made a lot of money on it, even though it's been volatile ever since.
Those stocks.
So what's the difference between that and something that's manipulated?
So those stocks traded on exchanges where there were rules and surveillance designed to prevent manipulative techniques, such as the two of us agreeing to sales at high prices in order to drive the price up so that we could then sell our securities when others jumped in. Those kinds of safeguards do not exist currently in all of the exchange venues where digital currencies trade. So when you're seeing an asset trade on the NASDAQ or the New York Stock Exchange, there's a great deal of surveillance that keeps you and I from kind of teaming up and looking like we're decentralized when we're really not. We're trying to paint the tape or do other things.
Right.
Those kinds of safeguards do not exist in many of the markets where digital currencies trade. Can it be improved? Yes, but that is an issue that we're looking at.
Got it. And so does the answer to that, obviously the individual securities exchanges need to take responsibility for themselves. But is that an issue that looks like a an industry self-regulatory solution, not unlike things like SIFMA?
Look, how that issue gets addressed, I don't have a particular path, but it's an issue that needs to be addressed before I would get comfortable that the prices that people are seeing, the retail investor is seeing, are the kind of prices that they're used to relying on, and free from manipulation, not free from volatility.
Right.
Volatility is a natural part of markets.
People sometimes confuse it too, which is why I raised the issue.
Right?
But why wouldn't it be better for those sort of securities to trade on things like look more like the NASDAQ and the CBOE than some of the exchanges that you've talked about, that you referenced?
I think it probably would be better.
But those would require the permission from the SEC to list on those exchanges.
Well, let's see how this evolves.
Okay, got it. And then on the custody piece of it, I assume that looks just more like a technical problem inside the industry where the custody tools and technologies need to be improved and hardened.
Yeah, and look, I think we've seen some thefts around digital assets that, make you scratch your head.
Gotcha. Okay. So one last question. I think we're basically out of time, but I'm going to continue with one last question.
I'm a captive audience.
So you've talk about how you've built capacity at the SEC to understand the digital currency ecosystem. I know you have a group here in New York. You recently announced the launch of the FinHub that will focus on issues related to ICOs and digital assets. What's the purpose of the FinHub? What role do you see it playing in this space going forward, and how can the folks in this room interact with it?
It's there to provide a centralized resource for people from the private sector who want to interact with us and see what we have been doing in this space to date. It's basically a conduit to contact the SEC.
Okay. And how do folks here find that? It's available online?
Yes, www.sec.gov.
And it's a guide, as a way for them to come into your system.
Come into our system, understand our perspective, get more flesh on the bones of the issues you and I have been discussing today.
Okay, great. So are you going to answer the first question? Are you long Bitcoin? Jay, thank you very much for taking the time with us today. Really appreciate it.
Thank you.